Helping Seniors Television, all about improving quality of life for seniors. If you're a senior, know a senior, or plan to be a senior, then this show is for you. It's all about helping you develop your own aging plan so you can age actively and with dignity. Helping Seniors Television from the Helping Seniors Network of information, education, and resources.
And I'm Kerry Fink. Welcome to Helping Seniors Television. On behalf of our president and founder, Joe Steckler, and our entire Helping Seniors team, we welcome you to today's broadcast. So excited to introduce you to a good longtime friend of Helping Seniors, Barbara McIntyre of Reverse Mortgage Funding. How are you today, Barbara?
I'm just great, and it's a pleasure to be here, Kerry. Good to see you.
This is always a great topic because I think one of the aims of Helping Seniors is always to create information that is valuable to us in terms of creating an aging plan. As you know, our president and founder, Joe Steckler, often talks about we need an aging plan, and people oftentimes say, well, what do you mean by that? And I always give the preamble saying, look, when we're kids and we're in school, they say, what do you want to be when you grow up? What's your plan? What are you going to do with your life? And they're asking you to think about your career, what your family's going to look like. All those kind of questions come up. And then when you get into your earning years and you're busy with all the work that you do and things like that, they say, well, what's your retirement plan? What are you going to do? What's your financial plan? Are you going to send kids to college? Are you going to retire? Are you going to get a second home? What are all these decisions that you're going to make in your earning years? But then the question is, we get to our retirement years and we may have a financial plan if we thought about it. But the question is, do we have an aging plan? Do we have thought through the things that we might be running into in that part of our life and have a plan so that we can address anything? I heard somebody else say, we live in Florida, so we understand when they tell us what's your hurricane plan, right? You hope the hurricane doesn't come here and you're going to believe for the best, but they're still going to tell you, make sure your flashlight has batteries and you have water jugs and all those kind of things. And I think that's what Joe's point is about an aging plan. And one of the things what we're going to talk about today is reverse mortgages, because that can very much be part of your aging plan and making things work to make that aging plan really be optimal for your benefit. And so the title of today's program is 3 Reasons to Consider a Reverse Mortgage. And Barb, as we've talked about this for years, there's a lot of good reasons to consider including a reverse mortgage in your financial plans. But I guess the thing you wrote, and you've written articles, by the way, in the Helping Seniors newsletter before on just this topic, but I think let's go ahead and dive right into the very first point that you mentioned was, at the very least, it could be a way to stop paying your mortgage payment.
That's right, and can be so helpful to a senior's daily, monthly budget by eliminating the obligation for a mortgage payment. Then they're saving that money to be able to spend for things they need through the course of a month. And we realize that there are trillions of dollars in housing equity belonging to seniors. And if they have a mortgage that they can eliminate, they can actually tap into that equity if they really need it. And that is one of the biggest reasons. Like you said, there's many, many reasons to use a reverse mortgage, but that can make the difference night and day to eliminate that payment.
Yeah.
The other thing we talk about, sorry, Kerry, the other thing we talk about is that you can make a payment on a reverse mortgage. So you always have the option of continuing to pay down the balance on the mortgage, just like any mortgage you might have. But the idea is having that flexibility to make a payment when you can afford to make a payment or not be required to. So it makes a very big difference.
Yeah, and that was going to bring me to the point that I want to make is actually, as you have described it, the difference between your current mortgage and a reverse mortgage is you better make that payment on the current mortgage, or your house is kind of at risk. And the reverse mortgage, all of that stress goes away because it's entirely up to you. You can pay it or not pay it. But maybe a good place place, maybe we can actually rewind just a point and say people have heard a lot about reverse mortgages. I think most of us have probably maybe seen a TV commercial or at least become familiar with the term, but maybe we don't really understand what a reverse mortgage is. And I think as we go through these 3 points we're going to talk about today, maybe we back up with just a quick primer on what is a reverse mortgage.
That's a good idea. Reverse mortgage is just a mortgage. Mm-hmm. It's just like the mortgage you obtained when you first bought your home. Mm-hmm. If you may still owe on that mortgage and are making a monthly payment, or you may have paid it off. A reverse mortgage is strictly a lien interest on someone's property. It's no way ownership of a property. Banks are not buying a borrower's home through the use of a reverse mortgage. So it's just a lien interest, but how it differs is that it has no mandatory requirement for a monthly principal and interest payment. You can make a payment if you choose, but it's not required. So like you said, Kerry, when you take a mortgage into retirement and you're on a fixed income, mm-hmm. and then something happens, some life event happens, mm-hmm. and all of a sudden making that payment becomes a hardship,
right.
Then you really have put yourself at risk, because lenders want to get their payments, and if they don't get a payment, then they can actually move to take your property. Right. That can only happen in a reverse mortgage if you do not pay your taxes, your property taxes, your homeowner's insurance, HOA fees if you have a homeowners association, and if you do not live in your property. That's the only way a reverse mortgage will move to take your property. So you're never at risk as long as you do those things.
Yeah. So I was actually thinking like what we were just talking about. So I may have said it the right way, right? If you have a traditional mortgage, you have to make that payment every month. Even when you're going through a hardship, maybe you have some medical bills that popped up or something else is going on. Doesn't matter, the clock ticks and you still got to make that payment. Right. And if you don't make it, then there's late fees. If you don't make the late fees and the payments, and all of a sudden you're in a foreclosure situation. Exactly. And yet the flip side of this is when you look at the reverse mortgages, that requirement, it's up to you. I make a payment, I don't make a payment. It's just literally, I'm in control.
It's exactly true. You have to be 62 years old to qualify for a FHA insured reverse mortgage. I can't imagine why someone at 62, even if they're still working, knowing that they're just mere years away from retirement, if they wanted to access their equity and they were looking at a home equity line of credit or a new first mortgage on a home, why they don't look at a reverse mortgage and compare them. Because to me, it makes no sense to take a conventional mortgage into retirement. A 15, 20, 30-year conventional mortgage into retirement makes no sense.
Well, and actually to the point that you're just raising, right, maybe you're getting to that age of 62 or I think you've even explained in some cases there's some options available even at age 60. But the point is, for most of us, right, our house payment is probably our single largest regular monthly expense. And if you were to apply for a reverse mortgage, theoretically, you could get rid of your mortgage payment and just use the proceeds from the reverse mortgage to pay that. And then it would be up to you. You could either make those payments if you're able to, or just say, I'm not going to do that for right now, but I still want to keep the value in my home.
Exactly. And what's amazing about the reverse mortgage is that if you make payments on a reverse mortgage, on some of the products that are available, you create a revolving line of credit that you can draw on in future years. And that just gives you access to more and more of your equity. When you make payments on a conventional mortgage, all you're doing is giving the interest to the lender. And one day, way in the future, you're starting to pay down principal balance. On a reverse mortgage, when you make a payment, you actually create a way to draw those funds back out if you need it. only exists in a reverse mortgage.
That's an interesting point because, right, when I make my monthly mortgage payment, yes, I've reduced what I owe, but if I need more money for something that I didn't expect, now I've got to think of a way to do that because I can't simply go back and say, give me some of my mortgage money back. It doesn't work that way.
No, it doesn't. And the other thing is, surprisingly, if you look at amortization schedules, when you pay on a conventional mortgage, you're not really, for most of the time, you're only paying the lender his interest early.
Right.
You're not really paying substantially down on what you borrowed. So you have to really pay that conventional mortgage for years and years to get finally to the point where you're actually creating your own equity based on what you've paid down. Completely different in the HECM, the reverse mortgage.
Yeah, I was just thinking about, as you were saying that, let's say somebody got a mortgage, maybe they got a 30-year mortgage and they were either in their late 30s or early 40s, and they're getting towards the end, maybe they have 10 years or maybe they have 5 years left on it. I was thinking about the argument for reverse mortgage could be also, by the time you're at the tail end of your mortgage, you're really mostly paying principal down at that point anyway. So you're not getting the rules have changed. You're not getting that interest deduction in the way that you used to on your taxes,
right.
number one. And then number two, you are paying down your principal, which is a great thing, but you can't tackle that if you needed it someplace down the road because you had an unexpected medical bill or something else that hit you. But with the reverse mortgage, not only could you get rid of that payment that you're making each month, but as you point out, if you make the payment, you're kind of perpetuating your line of credit.
Absolutely, absolutely. And most people don't understand that. There's a lot of people that have a reverse mortgage that don't understand it.
Right.
Because it really is what's kind of in the mortgage details. Right. And if they did just want to pay off the mortgage, the existing mortgage, and if they didn't really understand fully how this program works, then they might not even fully understand that they can create that line of credit.
Yeah.
Line of credit in a reverse mortgage cannot be canceled, reduced, or called due. So what that basically means is that when you do your reverse mortgage and you create or have that line of credit, while property values are going up now, and that's wonderful, which is why it's a great time to look at this program. If, however, property values started to decline, because we know oftentimes real estate can be somewhat cyclical and we can see it coming back down, just ups and downs, what you do with the reverse mortgage line of credit, it's insulated. It's only going to continue to increase regardless of what the home value is.
And, I was thinking even more to your point, because I've heard you explain that it makes good sense to lock it in place early because it will grow over time. Your borrowing capacity will grow over time. And I was thinking, even that's an interesting thought if you would weigh out, I have the reverse mortgage here and I have my conventional mortgage here, because the strategy that most of us might think of first is oh good, I've built up a lot of equity in my house. Let me go get a second mortgage and I can have a line of credit so that if something comes up, I can use that. The problem with that thinking, at least correct me if I'm wrong, is now I have two payments, not one. I have two payments.
Right.
And then on top of that, I have to make those payments, so I don't have any flexibility. And if I'm understanding your point about the reverse mortgage, I could actually retire all of that and then choose, I want to pay it, I don't want to pay it. It's totally up to me.
That's right. And right now, if you were to want to go get a home equity line of credit from your local bank, you may not, because if banks are concerned about what's going to happen over the next couple of years with property values, they can just decide to stop giving home equity lines of credit.
Right.
And that's happened in recent months. The other thing is all home equity lines of credit have a period of time in which you can borrow from them. And then at some point in time, you can no longer take funds from that line of credit.
Wow.
In addition, they will let you oftentimes pay interest only for a period of time, and then they recalculate it and you end up having principal and interest payments. So there's a lot of information in the fine details of home equity lines of credit that None of that exists in the line of credit for a reverse mortgage. None of that.
Wow. So that kind of gives us at least a primer on the first topic we want to talk about. Maybe it could be a way that helps you eliminate that monthly mortgage payment, which is probably the largest part of your bill. The second thing that we wanted to put out there and discuss a little bit as another reason to talk about a reverse mortgage. A lot of people are trying to make decisions about when to take Social Security. And so as an example, the early retirement age, I think currently is 62, and depending on what year you were born in is one they call full retirement age. And we've had a very good number of retirement financial experts come on and say people oftentimes make the mistake of taking the Social Security at the earliest possible moment.
Right.
And that actually can boomerang on them in a negative way for two reasons. The first being that they are literally robbing from their future, because if you wait to full retirement, you get such a stronger benefit. But the second reason is if you're on the younger end of it and you're still working, you may end up having to pay back some of that because now you've overdrawn what they permit you to do in the early days. And so I think one of the points of advice that you've brought up about reverse mortgages is that it allows you to keep your 401k intact, your IRA intact, make maybe a more strategic decision about your Social Security, and maybe use the reverse mortgage as a way to supplement the monies that you need between now and that full retirement age.
That's absolutely true. And we have seen many times where deferring the beginning of drawing Social Security for some period in the future, the reverse was put into place. The borrower then started drawing a monthly amount, because you can take the funds out of a reverse mortgage many different ways. You can opt to take a specific dollar amount for a specific number of years. It's put right in your bank account, just like a ACH Social Security income deposit. It just appears at the first of every month. And then when they're ready to turn on their Social Security, they can discontinue taking that monthly draw from the mortgage. And they've accomplished that goal of deferring the Social Security income so that they can get a higher amount. It's given them a great deal of control. The other thing is, we talk about the retirement accounts and the fact that those are invested monies. Well, we've seen in the last 8 months, our markets go drop like a rock one day.
Sure, you don't know.
You don't know.
Yeah.
And so the worst thing people can do is, if they're relying on drawing out of their invested monies, and we have a huge downturn, they have to take out a lot more. They have to sell a lot more in there to get the same amount out, and it's going to take a long time to be able to replenish that. If they already have a line of credit, a reverse mortgage in place, they can tell their financial advisors, stop any future draws, and they can draw from their equity in their home through the reverse mortgage. And they can turn it on, turn it off. It's just very easy to get funds, their own equity, anytime they want.
Yeah, it really seems like it's a brilliant tactical maneuver to be able to access the equity that you've built in your home, because again, and I think that brings us to our third reason to consider this, is we talked about flexibility and control. So number one, if you just a quick recap, number one, we said this could be a way to help you not have to pay your mortgage payment or get rid of other debt that you owe and consolidate in a certain way. The second reason is because it may help you in your financial planning towards retirement, whether it be decisions about Social Security or whether you need to tap an IRA, or you could wait until that, what is it, they call it the required minimum distribution age, which I think is 70 and a half. So it gives you a lot of options. But the third, I think, is just as strong as the other things that we've talked about, is that it puts you in the driver's seat. You have flexibility and control. You make the decision about whether you want to access it, how much you want to access it, whether you want to pay it back. And I think this is the point that most of us really don't understand well is because I guess there's the horror stories out there, oh, the bank is going to come and kick me out of my home, or things like that, those kind of things that just, they weigh on our minds, and yet that's not really the reality of it at all.
Oh, no, not at all. You know, the obligations to this mortgage are far less than they are for any other mortgage because you don't have to make a payment.
Right.
So the horror stories we hear would be true in any event.
Right.
If you don't pay your property taxes, within a few years, they're going to sell your house on the courthouse steps in auction.
You have to do that, right.
It's just the way it works. If you don't carry homeowners insurance and something happens, you don't have a home. The interesting thing about a reverse mortgage is that the only asset that is ever looked to repay this mortgage is that house. So that's why when you do hear a horror story, or it sounds like a horror story and you don't have all the facts, what's actually happened is that borrower, even though they knew they had to pay taxes and maintain insurance, they defaulted on that. Actually, lenders do everything in their power to assist borrowers to pay back those taxes and to put that, we even place forced insurance as long as we can. And yet, if the borrower doesn't step up and do what they have to do, then the lender is forced to foreclose, because the only way the lender can get any of the repayment is from that house. Unlike other mortgages, estates can have an estate can be tapped for debt, but with a reverse mortgage, your heirs are never held liable for any debt related to a reverse mortgage. Only the home is responsible. You could have lottery winnings in the bank, and those are not going to be used to repay this debt. So there's a lot of misinformation out there, even though for the past 16 years I've been trying to tell everybody it's a good product, and financial advisors are using it more and more as adding it to the long-term financial plan.
Well, it really makes a lot of sense, because the other point that we talked about here in Florida in particular, we enjoy some really good protections if we have a homestead property. And that has to do actually with the value of that property for your heirs. And while I'm certainly not an attorney and not trying to speak on any level like that, research it for yourself and find out, because what I understand is very difficult for other creditors to look at your home. And so that's probably one of the safest places to be, and it's one of the reasons to keep your home. And again, when you do a reverse mortgage, all you're doing is that's the only thing that's on the line is your home, and you have it for your entire lifetime, or as I think the way you say it, right, till the last person on the title leaves the house.
That's right. That's exactly right. Till the last borrower on title permanently leaves the house. They could leave the house because they moved in with Susie, their daughter. They could leave the house because they went into a nursing home. They could leave the house because they passed away. But that's when the loan becomes due and payable.
And on top of that, you mentioned that there are provisions. So what happens if one of the borrowers has to do something different? Maybe one of them has to have a nursing home, but the other one is still able to live at home.
Then nothing happens. The mortgage just goes right along. Whatever's been promised, whatever that income stream was, that growing line of credit, it's accessible to the borrower who's still in the home.
So this is actually a great plan for a couple that's in a home, because it offers a lot of protections on both sides, because you're still maintaining the value of your homestead residence. You know, your taxes are lower because it's your homestead. All these advantages kind of accrue to you because you're aging in place. And we've even had this conversation in prior radio shows and things like that, where you've talked about oftentimes you've seen people use reverse mortgage to actually improve the quality of life and the safety at home.
Absolutely, absolutely. Putting up grab bars, maybe even redoing a bathroom so that they have one of those really nice step-in tub shower, a remodel, and they tap into equity. They use it to remodel and do things to make the house easier for them to live. They also use the funds for services, and we have partners here at Helping Seniors of Brevard, wonderful services that can come in and provide different care, meal preparation, grocery shopping. they use it for that. And, back to what you said at the very beginning, Kerry, it's about having a plan. You said it so eloquently about all the ways we plan through our lifetime.
Right.
And as we get to our aging plan, we have to decide. Now, if the aging plan said, I really do want to go to assisted living, I think I've already picked out my spot, because it's just beautiful there and I want someone to cook for me forever, then you would not want to do a reverse mortgage on your home. But many, many seniors say, I really want to stay in my home, age in place, have resources to have what I need so that this can be my goal. And if that's the case, then knowledge is power. And it really helps to get the information, learn about it, so that you can see when is a good time to put it in place and make it part of your financial plan.
And I thought there's one other point that I wanted to bring up just as we're getting towards closing. But a lot of people say, well, I don't feel right about this. I'm not going to be able to leave the house to the kids or whatever. But that may be a false assumption anyway, because we don't know if the kids really want the house per se, or maybe they're just looking, if there's value in the house. And I think one of the key points that you've brought out is the fact that when you take a reverse mortgage, well, there's no guarantee. Typically, properties increase in value over time. So even what you borrowed, remember, it's only limited, the payback is only limited to what was borrowed. So if the house is appreciated significantly over 20 years or something like that you might still be living in it, there's still going to be possibly a remainder for your heirs.
Right, good point. And it's very true in today's reality, because the percentage that is loaned to borrowers based on their age and interest rate and value, it's not 100% of the value. So we already have in mind the longevity of that borrower. We use just like insurance tables to figure out how long do we think these borrowers will live, and we want to make sure there's still money in the home, because we want the heirs to be incentivized to want to take the property and decide if they want to sell it or even pay off the mortgage by obtaining their own mortgage. As long as the borrower leaves a path to title for their heirs will make the decision whether they want to keep the house or sell the house. And there's usually money in it for them.
It's a great advice. Okay, so real quick before we close out, phone number to reach Barb and talk about the specifics of your situation with Barbara.
Okay, you can reach me anytime at 321-259-7880. That's 321-259-7880. Be my pleasure to give you information and answer all your questions.
And thank you for joining us for Helping Seniors TV today.
I'm Joe Steckler. Thank you for joining our program today. I'd like to remind you that our senior information line is available to you at 321-473-7770. There you can get help and direction that could be helpful for your specific situation or circumstances. The work of helping seniors is very important, but we can't do it alone. That is why our sponsors here in Brevard County are so important. I'd like to thank our many area sponsors, businesses and medical providers who support the mission of helping seniors that help us carry the cost of our media efforts. If you'd like to join us either as a business partner or simply donate as an individual, we would welcome your call at 321-473-7770. You are always welcome to visit our website at www.helpingseniorsofbrevard.org. Thanks so much for your help. It does make a difference.